Let's get down to the New York Stock Exchange and check in with Jim Cramer. Jim, I have been anxious to see you this morning because we've got a new trading month, something new to look at.
Right.
We managed to avoid the worst situation that we were facing yesterday with the Nasdaq closing up by about 3.4%. It pulled it out of correction territory.
Right.
What happens now? Are we still in the throes of this up and down, or do you think that things have stabilized a bit?
I think we're in the throes still. I feel that a lot of the analysts have come out of their foxholes because they feel it might be over. A lot of reiterations, a lot of people saying things are good. My problem with that is that we are still very much in an inflationary world where we'll have tomorrow could be a story about 50 basis points. Anytime we get one of these stories, we're still, no one's saying that we got the port situation under control. No one's saying that we really have COVID other than in the New York area. It still comes up constantly. And so I end up thinking, well, do I want oil to go up because I want Exxon to go up? Do I want oil to go down because I've got the Fed? I want the Fed to be on my side. And I could go that for almost every industry needs inflation at this point because they had inflation of their raw costs. Now they need to put through price increases. So, I mean, I just feel like that there's just not enough. There are not enough good things happening other than an oversold bounce and analysts who are coming out and saying this is the time. And that will last for a couple of days, but then that's it.
Yeah, the mood of the market right now seems like this re-rating, right? Where it doesn't matter what earnings are going to be. It matters like what the street is going to give them credit for, what multiple they think that they should be paying on these things. We had this conversation with Steve Leisman earlier, and he talked about how maybe you won't see as many rate hikes as some are anticipating at the high end. Maybe you won't get 5 rate hikes, but the Fed will do a lot of issues with the balance sheet and really shrink it pretty significantly. How does that play out on the market? What does that mean? We've never seen a shrinkage of the balance sheet like this.
Well, there it is. We've never seen it. So I think that's going to keep people on the sidelines. I think that all this so-called sideline money gets drawn in periodically, very episodically. Look, I am in favor of companies that make things and do things that we really feel are good about. As long as we don't have an influx again of IPOs and SPACs, we maybe can settle down, Becky. I mean, finally, there's just this end of the endless strain of capital that comes from the garbage that the street's been pumping out. Right. That has to stop. If that stops, we get a reprieve. Yeah, I mean, but I'm going through. We have this fabulous SPAC index. You can't even look at it. And anyone who buys these things, I mean, you're just taking your life in your hands. I mean, there's so much money being lost.
I'm glad to hear you say that. I am glad to hear you say that because I heard one this morning and I was thinking, what in the world? That sounds like a pretty dangerous place. All
Hard pass.
Shepard Smith here. Thanks for watching CNBC on YouTube.